Okay, I think we'll make a start. Good morning, everyone. My name is Pete Chapman. I'm one of the International Trade Advisors here at the Chamber of Commerce in Staffordshire. So today, just get the screen changed. So thank you for joining us. My colleagues Wendy and Maggie will be talking through today's international trade webinar on an introduction to importing. If you've missed any of the previous webinars, they are available on the Staffordshire Chamber of Commerce webinar library, and I'll mention that again at the end. Just before we start, just a bit of a heads up on the Zoom platform, for those of you who maybe haven't used it before. We cannot see you and we cannot hear you, so the only way you can communicate with us is via the chat function. Which you will see if you just hover over the screen with your mouse. And we also have a Q&A button as well. So what I suggest was any comments initially just use the chat function. But if you have any particular questions for Wendy or Maggie, please use the Q&A because I will be monitoring that towards the end. So I think with Maggie and Wendy, we'll go through the presentation, go through the slides, and then we'll have a few minutes at the end just to go through as many of the questions as we can. If we can't fit them all in, we will try and get back to you afterwards. We are obviously all working from home, so forgive us if there's any Wi-Fi buffering, but touch wood, we should be okay. So I think we'll make a start. So I'm going to hand over to Wendy. Over to you, Wendy.
Thanks, Pete. Good morning, everyone. Many thanks for joining us for the last of our series of international trade webinars. With the UK exiting the EU Customs Union at the end of December 2020, it's essential we've prepared. So we've provided a series of mini webinars so business can understand the challenges and opportunities of international trade, and especially as we're heading towards post-transition. Today's session is covering the practical aspects of importing. This is ideal for anyone new to importing goods or to those who require a better understanding of the procedures, documents and cost implications. As mentioned in our previous sessions, this is a quick taster, a whistle-stop tour if you like. So it is a very brief overview. So if you'd like to know about the subject in more detail, then please let us know. The session should only take around 30 minutes, followed by Q&A, as Pete's just said. Our contact details are provided at the end of the presentation should you need any further guidance. Over to you, Maggie.
Morning, everybody. So next slide, please, Pete, if you would, and we'll have a look at the agenda. There we go. So let's have a look at what we're talking about today. So what is actually meant by the term import, and how does this differ when buying from inside or outside of the EU? We'll look at some of the things a company should consider before making that purchase from outside of the UK. Are the goods you plan to purchase controlled or restricted goods, and how to find that out? We'll also touch briefly on tariff codes. We spoke about this in more detail last week, but again, we'll see the relevance when importing. And those all-important import duties and VAT, which can influence your decision to buy from a particular country, overseas, or a particular part of the world. The paperwork as well, import declarations and documentation. And we'll also look at some of the temporary customs easements in view of COVID-19 and what may happen post-transition. And the next slide, please, Pete.
So what is an import? Well, basically an import is goods or services purchased from outside the EU. So when goods are coming into the UK from outside the EU, they have to be declared to customs and customs cleared before you as an importer will receive your goods. And this means appropriate paperwork, licenses if applicable, have to be in place and duties and taxes have to be paid. When moving from the European Union, they're called acquisitions, not imports. That's the official term used. You'll need to pay VAT, but not import duty. VAT will need to be declared on your VAT return, and you can claim this back if the goods are for you to make taxable supplies or use in your business. You don't normally need an import license or any documentation, and the goods do not need to be customs cleared, and import duties don't apply as it's free trade. However, post-transition, you will have to follow the same rules as the rest of the world. So if this is new to you and you've only imported from the EU until now, then it's important that you are prepared and understand the process and what you need to be aware of. And the next slide, please.
Okay, let's have a look at some of the considerations that an importer should look at. For instance, is an import licence required? Now, the import of certain goods is controlled by HM government. The obvious items like guns or weapons of mass destruction, some chemicals, torture items, all that kind of stuff, are subject to licensing laws currently for wherever they go to or come from in the world. At the moment, dual-use goods are accepted in EU trade and not subject to licence. So what do we mean when we talk about dual-use goods? These could be some chemicals, software, computers, blueprints for technology, or even emails, anything that can be used in normal trade or can be transferred to a military use. Now, following the transition period, that may change, and we've been advised that licenses will be required for imports from anywhere in the world. Of course, this will be subject to EU-UK negotiations, but for the moment, you can check on the website shown here. So are there any sanctions or embargoes? These are other restrictions on imported goods or the country you may wish to buy from. The customs tariff will guide you on that, or we can help you. Are the goods technical and do they meet current approvals? Currently, we're bound by EU regulations, but that may change post-transition. And we should also be looking at the country risk. Is the country you're planning to buy from stable? Is that government likely to impose restrictions, making it difficult for you to get your goods? And can you pay via the normal banking channels? There's restrictions on certain countries, and potentially your supplier may insist on cash in advance, which could interrupt your cash flow. Next slide, please.
So more considerations for you to be thinking about. So before you purchase anything from overseas, particularly if it's from a new supplier, it's important you do your due diligence, the same as you would if you were selling your goods. So what about the reputation of the seller? Are they legitimate? Are they reputable? What about their trade history? What about the quality of the goods they are supplying? The last thing you want to do is to import a shipment of goods without checking the quality. We have known companies who have imported goods without checking out the supplier to find that the goods do not conform to standard, are broken, or are simply poor quality and cannot be sold. And to top it off, the importer has already paid in advance. Other things to consider are origin of goods. In case you want to resell them overseas, you'll need to know where they have come from, as some overseas customers will want to know the origin of the goods. And this is your proof. Type of goods and what is the commodity code, or tariff code as we sometimes call it. We'll talk a little bit about that shortly. The type of goods you import may need specific documentation or licenses, or there may be some other restrictions which you need to check out before you import, such as quotas, for example. Your tariff code will tell you what restrictions there are. Preferences: does the country you are importing from have a trade agreement with the EU? That is, do we have mate rates, to put it in simple terms? If it does, then you could potentially be paying a reduced or a nil rate of import duty when it arrives in the UK, which will be more cost effective for you. If there are no preferential agreements, then you will need to check how much duty and tax you will be paying when it arrives in the UK, so you are prepared. Payment: how will you pay? Is it a new supplier? Do you really want to pay in advance from a supplier you don't know, or should you be thinking about negotiating more favourable payment terms with your supplier? As an importer, you want to ensure you receive the goods you've ordered and they are of a good, consistent quality. The most common option for importers is open account trading, as it poses the least risk, ensuring you receive the goods before paying for them. Can we have the next slide, please, Pete?
As well as that, we have the logistical considerations. How are your goods going to move? By road or sea or air? Have you got the capacity to offload containers or trailers at your premises? Whilst more costly, air freight may be a better solution. It all depends on your business needs. And what about the transit time? Can you meet the deadlines to satisfy your own client base? And what about the overall cost? Something that needs to be factored in depending upon your Incoterm. Also, paperwork requirements. Can you manage this yourself, or do you need to outsource? Will the supplier handle this? Again, this may depend upon your Incoterm. Next slide, please.
So your purchase order. Once you've done your due diligence, checked your supplier out and gone through all the considerations we've just talked about, then you need to confirm your requirements to your supplier. As it says here in the slide, clear and written instructions to the seller, and the list is self-explanatory. It's best to confirm the details of the purchase with your supplier right at the beginning and make sure you receive confirmation from them, so you are happy in the knowledge that they can meet your requirements. Most of it is pretty standard for general goods, but as we've said before, some goods have specific requirements and restrictions, so you need to be clear on what needs to be done. You'll see there it says arbitration, force majeure clauses. For those who don't know, force majeure is a legal term and is designed to excuse one or all of the parties from liabilities or obligations in a contract. It arises when there has been an occurrence of unpredictable events like wars, strikes, earthquakes, and it's out of anybody's control. And now, of course, we are faced with the unpredictability of the COVID-19 crisis, so very relevant at the moment. Unforeseen events are not easy to predict or define, as we know. Force majeure clauses continue to be an active source of disputes, particularly in trade and emerging markets. It's important, therefore, always to refer to your contract before making general assumptions. Can we have the next slide, please?
Incoterms. Now, we've touched on this before, but because they have such an impact on the international sales contract and business responsibilities, we'll do a very quick recap. There are 11 of them, and they change about every 10 years to reflect changes in business models. The current version is Incoterms 2020. Most companies will probably only ever use 2 or 3, and it's very rare that a company will use all 11. But they are internationally recognised and legally binding, so they should be stated on all commercial documentation. They're important because they're the building block for a good and sustained trading relationship, because they define 3 very specific areas. Firstly, where delivery takes place. In other words, where the seller has to make the goods available for the buyer to take receipt. And that could be anywhere from the seller's premises to the buyer's factory. Secondly, where risk passes from seller to buyer. So if anything happens to the goods in transit, it defines who's responsible for replacing them, repairing them, or claiming off insurance. And thirdly, who's going to pay for what? And that can be freight charges, handling costs, import customs entry, duty and taxes. So you can see how important it is to establish these things right at the beginning of your contract with your supplier. And the next slide, please.
So EU and non-EU purchases. As we've already discussed, buying from the EU is very simple at the moment. Limited paperwork, no duties to pay, customs declarations not required, so very easy. However, purchasing from non-EU countries takes longer to process because a customs declaration will be required. Paperwork, most definitely, and import duties and taxes will have to be paid before you will be able to receive the goods. And don't forget the measures, restrictions, licenses you might also need. So if you haven't imported from outside the EU before, these are the considerations you will need to take into account, as there will be added costs and possible delays at customs if you haven't got all your ducks in a row. Added cost being import duties and VAT, and customs declarations, as you are charged for these too. Can we have the next slide, please?
We've briefly touched on this before, but let's have a look at the official HMRC definitions. Now, officially, if you're buying goods from other EU countries, they're called acquisitions. And goods coming into the UK from the EU are called arrivals. The term import, for HMRC purposes, means goods coming from outside of the EU. And Wendy's touched on that previously. You'll still need your commodity code or tariff number, not for duty purposes, as there's no duty payable on EU acquisitions, but for information about the product and for statistical purposes. Currently, and until the end of the transition period, statistics on international trade between the EU are collected via Intrastat, which stands for International Trade Statistics. If you import more than 1.5 million from the EU, you're obliged to complete intrastat declarations. Below that amount, you can enter the information on your normal VAT return. And should you want to find out more information on intrastat, there's a customs notice 60, and that will give you all the information that you need on that. Can we have the next slide, please?
So Maggie has explained about importing from the EU. These are called acquisitions. However, if you're importing from a non-EU country, an importer will need to find out how much import duty and VAT they will need to pay when it arrives. So how do you do that? Firstly, you need to know what percentage of duty has been set by UK customs for your particular goods, and your tariff code will tell you this. You use the trade tariff link here on the slide to find it. So how do you work it out? Well, it's quite straightforward. Duty is charged on the CIF value. CIF stands for cost, insurance and freight. VAT is charged on the CIF value, the duty cost, and on the UK charges. So to calculate the duty rate, you simply add the cost of freight to the value of your goods and any insurance, and that's the CIF value. Add this all together, then add on the percentage of your duty rate. Then you simply multiply your total value of goods and any shipping costs by the customs duty rate. And this is the approximate amount of import duty that you'll have to pay. The VAT is then calculated on top of all of the charges. So that includes the total value of your goods, the shipping costs, and then you have to add all the UK charges such as customs clearance and delivery costs from port of arrival through to your door. So that's how it works. It's quite simple, really. Can we have the next slide, please, Pete?
Now we'll look at preference agreements or trade agreements. Currently, the EU, which includes us until the end of the year, has trade agreements with territories around the world. This means the EU and those participating countries can trade with little or no import duties on goods, providing the product qualifies. And this may be really important to you post-transition. It can really focus a business on where good trading partners exist. So to really simplify, it was set up to make sure that partner countries could trade with each other to their mutual benefit, to encourage us to trade within the club, so to speak. We may lose some of those partners, but more will be coming in online shortly. Trade agreements can help reduce tariffs and duty rates, but for most countries, there will be documentary requirements, such as EUR1 forms and ATR forms. If we leave the EU without a deal, post-transition, we may return to WTO rules. And the next slide, please.
So how do I know if goods qualify? So Maggie has just explained about preference and what it means. So how does an importer find out if the goods they are importing qualify for preferential treatment to enable them to pay a lower or zero rate of import duty? Well, the tariff code will tell you this. You use the trade tariff link, which is on the previous slide, enter the tariff code and then click on the import tab. And this will tell you if your goods are tracked to zero or a zero rate of import duty. Your supplier will have to ensure the goods are classified correctly using the right tariff code. They will then have to follow and comply to the preferential rules of origin, as it is the exporter who declares whether the goods qualify. In other words, the exporter will have to prove origin of the goods. In simple terms, they will have to declare that the goods have been manufactured in the EU or any of the participating countries of the trade agreement. Or if that doesn't apply, and some of the materials they have used are outside of the preference countries, then they have to prove there has been a significant process or value added to qualify. Once your supplier has gone through this process and established the goods qualify, they will send you an EUR1 customs document with their declaration on the back when they ship the goods to you. You need this document on import to allow you to pay a reduced or nil rate of duty. You can find all the preference countries on HMRC Notice 828. They'll give you all the information there and all about the EUR1 document. That's in Notice 827. The same principle applies to the ATR document for Turkey only, whereby your supplier would send you the ATR document as with the EUR1, and this will also allow you to pay less duties, but the rules are different for the Turkish one. We're not going to go through this today, but you'll find details in Notice 812, or just please give us a call and we'll explain it to you. Thanks. Can we have the next slide, please?
Duty deferment. This is the government scheme to help importers with their cash flow and to ensure goods move swiftly through ports and airports. Now, you have to pay import duty and VAT when you import goods into the UK. We mentioned earlier that goods traded within the EU, in other words, acquisitions, are not subject to duty. So at the moment, this applies to goods bought in from outside of the EU. But of course, that may change post-transition, and duty may be applicable on all goods coming into the UK. At the moment, you can apply to HMRC to use the Duty Deferment Scheme, or the DDS, to make monthly payments to HMRC through a Deferment Approval Number, a DAN. You have to give HMRC a guarantee through your bank that you can meet the cost of all your VAT and duties. The level of deferment account must be sufficient to cover your actual duty and VAT liability for 1 calendar month. So you really need to monitor this because your imports could fluctuate. Alternatively, if you use a freight forwarder, your freight forwarder or clearing agent may have the financial capacity to have a duty deferment account, and you can use that. But they will charge you for that privilege, and probably post-transition you may need to have your own duty deferment account, as there may be financial restrictions, or your freight forwarder or clearing agent may not have the financial capacity to take that work on for you. We'll have the next slide, please.
So moving into government easements post-transition, the UK government introduced postponed VAT accounting as a temporary easement last year. However, it was withdrawn on the 30th of January this year. However, it's now been reintroduced, and it was announced in the recent budget by the Chancellor in March. Basically, postponed accounting will be introduced for imports from the EU and the rest of the world. It's a VAT deferral scheme, so no cash VAT payments have to be made on arrival in the UK, but it's only available to VAT registered businesses. You have to provide your VAT number to whoever is doing your customs declarations. This will be customs entered and will show on your online month statement that VAT has been postponed. And this is your evidence to declare or recover import VAT on your VAT return. And the next slide, please.
In view of the COVID-19 situation, the government has put in place some easements to help both importers and exporters. And we're going to go through a couple very briefly. There are about 20 of them in all, but for instance, it will help you so that you don't have to pay any import duty on medical supplies, equipment and protective garments. There's also guidance on moving goods through customs during coronavirus, and also customs authorisations. Also help to speed things up and avoid physical handling of documents by allowing electronic signatures on documents instead of the original signature, or what we call wet signatures. And there's also support for importers struggling to pay their import taxes as a result of COVID-19. But that's just a few of them at the moment, and we'll have the next slide, please.
Yes, and here are a few more of the COVID-19 easements with specific reference to the importation of PPE equipment, but we're not going to go through them all, as Maggie said. We just thought we'd include them on the slides for information. There are more, as Maggie said. I think there are about 20 easements and information links, and some of them are export related too. So can we have the next slide, please?
So here is this link, and as Wendy has said, they're relevant to both import and export, and they're very useful and they're quite comprehensive. And if you click on that link, I'm sure you'll get a lot of useful information there. Can we have the next slide, please?
So the role of the freight forwarder. A freight forwarder is an agent who acts on behalf of importers, exporters or other companies to organise a safe, efficient and cost-effective transportation of goods. They'll arrange the best means of transport and the most appropriate route for a shipment, taking into account the type of goods and the customer's delivery requirements. Some are more specialised and can deal with particular types of goods, such as dangerous goods, or operate within particular geographical areas. They can offer consolidation shipments by air, sea and road, ensuring cost-effective solutions. They can arrange appropriate packing, insurance and complete the necessary customs declarations for you. Freight forwarders are well versed with all the paperwork required to move shipments to different countries. They are aware of all rules and regulations. Freight forwarders are governed by the British International Freight Association. So if you are looking for one, it's a good start to check whether they are listed on the BIFO website. And we'll have the next slide, please.
And following on from that, the role of the customs clearing agent. So what do they do for you? They're usually linked to your freight forwarder, but some are standalone and work for several freight forwarders or importers. They take care of the customs clearance activities, like customs entries, and are accredited with local customs authorities, border agencies and ports and airports, etc. Basically, they get your goods cleared for import and pass the relevant documents at customs along with the actual customs entry. So it's vital that the importer makes all the necessary information available either themselves or via their freight forwarders. They can also arrange customs inspections if needed and check and process duty and VAT payments on your behalf. And if you've overpaid any duty, they're authorised to apply for a refund on your behalf. It's not a free service and there will be charges, as there will be port charges and other costs incurred, such as for using their duty deferment account if you don't have one established yourself. We'll have the next slide, please.
So documentation. So as we've talked about earlier, there are documentation requirements for importing, and at the moment it's only for non-EU shipments. However, this will change post-transition, so will be required when importing from the EU. Goods won't be cleared without this documentation, with the exception of the preference documentation. Any good customs broker or freight forwarder should provide you with a copy of the C88, which is your customs declaration on import. We always recommend you check it for accuracy, as you don't want to be paying an incorrect amount of import duty and VAT. The customs declaration will have lots of information about your shipment, including the CPC code, which stands for Customs Procedure Code, and Maggie's just going to give you an overview of the CPC code in the next slide. So other documentation required for import includes the commercial invoice from your supplier, any transport documentation such as the bill of lading, if the shipment is by sea, or airway bill if by air, the preference document such as an EUR1. This will enable you to pay a reduced or nil amount of duty as the goods have come from a preference country, which we talked about earlier. Your goods will be cleared without this document, but if that's the case, if there's no document, you'll have to pay the full amount of import duty. Other documents such as import license and certificate of origin are also required. And finally, you'll have to keep the documentation for 6 years to be customs compliant. So can we have the next slide, please?
Okay, so what exactly is required to go on an import declaration? EORI number. Now, that is your Economic Operator Registration and Identification number, and that's issued by HMRC and it's linked to your VAT number. If you've already dealt with countries outside of the EU, you'll probably already have one of these. If you only deal with the EU, you may not have needed to provide that information previously, but post-transition you will. HMRC are auto-enrolling VAT registered companies and providing them with an EORI number. So if you're not a VAT registered company, you will need to apply for that yourself. And if you go do a Google search and put in EORI, it will bring you up the link where you can actually apply for that should you need one. Also required for a customs declaration is a VAT number. The value of the goods is required and the origin of the goods. And any supporting origin documentation, so as Wendy's mentioned before, certificates of origin, that kind of thing, or any preference documents, that will be required for the customs declaration too. The country of dispatch is required, and the tariff number, very, very important, the tariff number, and any import license information or anything to do with the restrictions that may be imposed on those goods. A CPC code will also be needed on the customs declaration. Now, CPC code, Customs Procedure Code, that tells HMRC what's happening with the goods, whether the goods are coming in temporarily to go into a special customs procedure or a customs warehouse, or if they're coming in for home use. Now, as an importer, you don't necessarily need to know what these CPC codes are. You don't need to know them all, but it's useful to be able to assess and tell your freight forwarder exactly what's happening to those goods, whether they are coming in temporarily or they're going to be for home use, because that will need to be added onto the customs declaration to actually get it through customs. And next slide, please.
So why is it important to get it right? Every business that is involved in the movement of goods between countries has to follow customs regulations and pay duties and tax as appropriate. Complying with these rules involves careful planning and effective management, as these rules are often complex, and staying compliant with imports and exports can be tricky, even for large companies, as shipping requirements are subject to complex changes that make it difficult to keep up with the latest procedures. In our experience, around 80% of businesses are not proactive on compliance matters, which also means opportunities to save duty are missed. This is particularly important given any under-declaration of duty can result in a business being assessed for duty, VAT, interest and penalties. Furthermore, over-declaration of duty can result in lost profits, as duty is often a sticking tax. Given that penalties start at £250 per import entry and can rise to £2,500 per import entry, depending on the severity of the errors made, getting duty calculations wrong can be an expensive mistake. So it's your responsibility to understand the process, and there is advice and training to help you. Over to you, Maggie.
And there we have it. That's brought us to the end of a little run through on basic introduction to importing. Now, as you can imagine, most of the topics we've covered today, we've covered them very, very briefly, and a lot more information surrounding each of them. We do run training courses at the Chamber of Commerce. We're not running them at the moment, obviously, but we run them on all these subjects here. And if you would be interested to find out more about the topics we've basically touched upon today, then please check our website, which will give you full information on the courses that we run. Thanks very much.
Thank you very much, ladies. So I've just put Wendy and Maggie's contact details up there. So let's just see if we've got any questions. So if any of you have any questions, if you can pop them into the Q&A section. We have a couple have come in, so I'll read them out. The first one from Tadane saying, what's the disadvantage to an importer not having a deferment account if they are importing regularly?
Do you want me to get that one, Maggie?
Yeah, I can do. As we mentioned,
no, yeah, you carry on, Mags.
No, you carry on if you've started.
Yeah. Okay. Yes. So today, if you don't have a deferment account, it just means that you will be paying duty and VAT immediately on arrival. So it could hold your goods up, basically. So it is beneficial for you to apply for a deferment account, because it means then the swifter movement of goods when they come into the UK, because it's deferring your duties, you don't have to pay them straight away. So if you haven't got one, you'll have to pay straight away. So, and again, until those duties and the VAT is paid, immediately on arrival, you won't get your goods. So that's really what the disadvantage is.
Okay, thank you. Hope that's answered your question today. And also to let you know that you've asked if you can get a copy of the slides. Apologies, I should have mentioned this at the start. Yes, all participants will be getting an email through in the next couple of days with these slides. So yes, no problem. Okay, we have a question from Alison, who's asking, who will do my import declaration?
Should I pick that one up, Wendy?
Yeah.
Well, generally speaking, as we said, freight forwarders and clearing agents can do import declarations. However, Chamber of Commerce, all chambers of commerce, British chambers of commerce throughout the country are able to do customs declarations on behalf of importers. Now, this is an additional service. Customs have given the authority for Chambers of Commerce to do this because of the expertise they've built up over the years in dealing in international trade documentation. They're very experienced. We, Staffordshire Chamber, have 3 trained, qualified staff to do import declarations as well as export declarations. We can do them both ways. So if you want any more information on that, please talk to us.
Okay, thank you. Let's just give it a couple more minutes for any last questions. Let me just check the chat box as well. Okay, we've had another question come through from Michael. How long should it take to set up a deferment account? We started the process in October, but are still waiting for our DAN number.
Oh dear, that is a long time, isn't it? Have you chased it up, Michael? I didn't realise it would take that long, actually, to set up a deferment account. Nor whether there's any hold up because more companies are applying for deferment accounts coming up to post-transition. So you probably find a lot of importers are applying for these deferment accounts. So where there's a backlog, but yeah, that's taking an awful long time. So we haven't been notified that they're taking that long. Normally a few weeks, well, less than that, to be honest. But if there is a backlog, then that might be the reason why. But we can certainly make some inquiries. If you want to talk to either myself or Maggie separately, then we can see if we can find out why it's taking so long.
I think also, just to add on to this, it's probably a combination of things at the moment because of the COVID-19 situation where
yeah, of course.
I see you've got a backlog of inquiries generally about not just about trade, but about funding and all that kind of thing. And that's by no way an excuse for the delay because it shouldn't have taken that long, I wouldn't have thought. But yes, we'll certainly have a look at that for you, Michael. Don't you worry about that.
Okay, thank you. Yes, Michael, I suggest you can see Wendy and Maggie's details on screen. So maybe just drop them an email with your details and they will they'll look into it for you. Okay, any last questions? I think we're coming up to towards the end. I'm going to give it a few more seconds. Just while we're waiting, again, as I mentioned earlier, let's turn my video on. As mentioned earlier, we've been doing a series of these international webinars, so please go to the website, the Staffordshire Chambers of Commerce website, where you will see the webinar library, so you can see previous versions. There's also some really good webinars on some specific countries, Singapore and Colombia. There's one on Russia, and we've got some lined up. There's a really good one on the UAE, and there's more lined up for next week. So please check those out. Okay, I'm just going to check there's no more questions. So I think we will finish it there. So just like to say a big thank you to Maggie and Wendy, as ever. Also, thank you for everyone for logging in this morning. I hope you've found some value from it. As I say, please contact Maggie or Wendy at the Chamber if you've got any questions. And that's the end of it. So enjoy the rest of your day and we will see you soon. Thank you. Bye-bye.
Thank you.